Also, the traders are happy because there are more opportunities to make business, of course, but us as an exchange are very happy. We are trying to promote liquidity by launching liquidity provider programs to have, as I said before, more prices on the screen. We are even paying for liquidity as an exchange. We pay for liquidity providers to bring their prices, their portfolios here. So yes, we live from volatility, we live from liquidity, but I think it was a great news that we had a great April and a great month of April, and the liquidity didn't cry as maybe it has been expected.
Would you ever think that there's something, I don't know, like volatility exhaustion? Can the people who benefit the most, the traders, the liquidity providers, and the real like the day trader type people, can there be too much volatility in the market?
Yes, I think too much volatility. I think it's a bit difficult for traders. But when markets are volatile, I think everybody is happy. Us as an exchange, we are happy. The volumes go higher. The traders find more business opportunities, and until a level, no? It starts when we had a day in which we saw the S&P and the Nasdaq falling 5 or 6% in a day. Maybe that's too much because traders prefer to wait and see. But with the levels, with the VIX around 40 index points, I think it's a perfect level to make money for everybody. And the derivatives market is the best way to have an advantage and to take profit for those levels of volatility.
You touched on something just before the liquidity exhaustion question that I'd like to expand with everybody on the panel here. Let's chat for a moment about what can be done, what creative solutions, or what work can be done to build liquidity. You mentioned paying for liquidity providers, but what does CME do to build liquidity? They're a very liquid exchange, but do you look at certain products that might be lacking in liquidity and certain things?
Absolutely. I mean, in addition to providing constant liquidity, and I have to add to Evan's point, as an exchange, obviously we love volatility, love the trading, love being able to provide, different parties to come and express their views. That said, I think liquidity, sometimes, and there were views about how liquidity is drying up. And so for us, it's not just the on-screen liquidity that we think about, but we also think about providing that off-the-book, that block liquidity where clients are coming, especially when you have a big block to trade, you don't want to impact the market. So how you provide, and create liquidity. So think about execution strategies. And one example I can give is, S&P select sectors, for example, futures on, and we know that there is deep liquidity that exists in the ETF market with the select sector ETF. So we have a derived block, which is a block trading mechanism where the dealer can source liquidity from the nearby adjacent market. So this way, it's not just what is available, but you can also tap into the adjacent cash market, whether it's ETFs or the basket of stocks to source that. And since we introduced that on select sectors, we have very heavy trading volume. And about 9 months ago, we extended that, derived block trading capability to a number of other contracts. So, for example, S&P 500 equal weight, right? There is an ETF that exists out there, trading volume, and we introduced the derived block functionality of the contract. This way, the dealer can also source the liquidity from an adjacent market and can remain hedged. So this is like the sort of like thinking and the solution that where we try to drive liquidity into contracts that may not have as much on-screen liquidity as we like.
You want to rip up that?
Yeah, sure. Something that A said about strategy implementation, I think, as far as my role as a the broker goes. You know, what's most important in my opinion for me is it's kind of a chain of events. So you start with engagement. Engagement is very, very important. Engagement then creates appetite, which creates price discovery, and therefore strategy implementation. So I think that engagement really can give us a lot of, and it's a two-way street, or a four-way street if you add all, the exchanges, the issuers, etc. As long as everyone is engaged in the conversation and willing to do something, not sitting on your hands, which is something that we saw during the 2010s. So engagement in this particular era is very, very important.
Eric, you guys doing anything special to build liquidity in IBC? Any fun things going on?
Yes, I'm happy to announce, we want to make like a quick announce. We are happy to announce us next year we are doing a big partnership with one of the biggest exchanges, derivative exchanges in the world, CME. We plan in the coming months to list our IBC future on the CME, so this can have more visibility, reach more clients worldwide, make sure it's more like a local and Latin American market than the US. But we know that CME is like a worldwide international market, so we want to announce that in the coming months CME will list our IBC future in an agreement between both exchanges to try to be and have a bigger presence in the world. Our brand, our main brand index, the IBC. Now everybody, when thinks in Mexico, everybody thinks on the IBC. The IBC index is a big reference. So expanding to an international market, of course, will give more visibility to this product, to this index, to many investors. And we also think that could bring more liquidity to our market in next year, because arbitrageurs can try to quote for both markets, to make arbitrage between both markets, and also to bring more liquidity to the cash equity market. For example, the NASDAQ, that is the perfect hedge for the IBC index, maybe also can have more liquidity in the market. That it's exactly what we need. I don't know if I wants to speak more about this.
Thank you. I'm personally very excited about this collaboration. Previously I was with S&P Dow Jones, and I spent a lot of time here. And so I have a love for the cash market index, and now I get to be on the derivative side. And at CME, really we bring liquidity to the market, but we are also providing our clients with capital efficiency, through cross margining, through offsets. So the clients that are trading, the funding T, which is the Mexico, the reference rate futures contract, can now have, the ITC, and so there's a lot of benefits that is available, and we are really excited to bring this 23 hours, 6 days a week, block execution strategies and all that, and to be able to provide that with to IBCs.
Maria, you talked earlier about what the regulator did during turbulent times. What are things around regulatory and market structure that you can do to help foster more liquidity and grow more liquidity in the market?
Thank you. This is a very important question, and part of what is mentioned so far is that you need to have and understand what is the dynamic of this market structure. So it's trying to understand what are the investors' needs, for example. That's why this is very important, at least for the local market, just because the composition of the portfolio, we need to enhance all the tools that we have to make the cash market more efficient. And I mentioned, what are the most important things that maybe we can put into the table. We are trying to push forward to issue digital bonds. to the extent it's easier, all the process and mechanics for settlement. Then we are working together to try to have a debt counterparty that can make benefits from the RWA strategies. We are also working together to try to make hedge funds healthy in the local markets as well, because we have long-run investors, we have some mutual funds that are increasing their assets under management, but the objectives or the trading objectives of each of them are different. Some of them are to maturity, we need to provide both ways. We are working as well with the CMBV and with the central bank on a sandbox for the equity market. And product is very important, but I believe that having the correct product would allow to have additional liquidity. And in that sense, the Rico, the bigger Rico, and having a more active derivatives market that actually allows the investors to catch their positions. With this transition we are doing on the Piecondeo, all those initiatives, I think on the midterm would allow to have a better market structure, and if you put digitalization as well, it will allow to have more volume. So far, we trade a lot, quite a lot. But some barriers are still there, and it's important to break it. And at least on our perception, to have instruments that actually allows you to hedge properly the cash market is super important. On the repo and the reverse repo side, for all asset classes, not only the government bonds, but also corporate bonds, also bank bonds and other types of bonds, also on equity, would allow the market to be more efficient and more creative in having new products. But we need to at least have that path already clear and always selling everything. It's just from the day number 2 to the day 27, because the store starts with the set of 28 days.
Listening to all this, it sounds like balance is critical. You have to get that proper balance of interest, education, market structure, regulatory, pricing, the whole 9 yards. I'm interested, Darren and Benito, what do you think are the biggest challenges here on the liquidity front when it comes to satisfying the future demands? There's been some big changes here on the pension front, and on the savings rate, there's going to be a lot of money, come 2030, there's going to be a lot of money that has to be deployed into the market here and elsewhere. In your opinion, what are the biggest challenges for that future deposit?
Well, right now, Monica mentioned settlements. There's a couple of things we need to do. Settlements is definitely important. We're part of a global market structure. Europe is, we're all T+1 now in this hemisphere. Europe is coming to T+1 in a year and a half. And managing a world where this evolves, then eventually we'll be a T+0. And then, when blockchain started, everyone was saying, well, maybe we could do trades with immediate settlement. And that would be something